2018 EBIX Cash Studio.
Hey, welcome back. Before the break, we were chatting with Shrikant Chouhan with for some ideas in the in the market. We have Chandan Taparia who will give us some cues in the F&O space as well. But before that, Shrikant, it's been phenomenal the run that we've seen in the market so far. What would your top picks be for trade, particularly for today?
Yes, Silik, for the day, we should focus on technology companies. The way Accenture had delivered numbers, I think all these IT companies should do well. And in that context, we like TCS, which is currently around 3880, 3890 levels. There we feel that the stock is moving towards the levels of at least 4000, 4050. We can keep stop loss at 3825 for the same. The other stock which we like is PVR, and the reason is because the stock is forming some cup with handle sort of formation, and it's a consolidation of 18 months. So after almost 18 months, the stock has broken its previous high of 1600. So the next level to watch out for would be close to 1750, 1780 sort of levels. We should look for adding even PVR at current levels with a stop loss at 1525. And the last one which we like is Tata Motors. Here the stock has spent nearly 7-8 months, and after trying multiple times to break the level of 218, finally the stock has managed to reverse back sharply. So the next level would be around again 350, 360, which was its upward boundary. So Tata Motor is also a buy at current levels with a stop loss at 313 on the downside, with a target of 335 and 350 on the high side.
Okay, got that, Shrikant. Thanks very much for the calls. Let's also sort of get some trades going with respect to the futures and options market. Chandan Taparia from Motilal Oswal is joining in. Chandan, good morning to you. What are your trades?
Yeah, good morning. We have seen the strong momentum in the market, and Sensex yesterday rallied by 1000 points, Nifty nearly around 300 points, Bank Nifty also rallied well by 800 points. So momentum is clearly visible in the entire market, and we believe this broad-based rally could continue to cheer the more color in coming days. So here we have selected a couple of ideas, all are in the long side. First focus will be in the IT counter. We have seen that Nifty IT index is continuously making higher highs, higher lows on the weekly scale from last 11 weeks, and it's up by around 8% in this series. And we were quite bullish in most of the IT name like HCL, Tech Mahindra, Mindtree, LTTS, and now it's time for the Infosys to show the cheerful and the catch-up rally. So recommending to buy on Infosys as the stock has given a consolidation breakout of last 27 trading session. It has already added 20% open interest, and now the momentum is just on the way. Recommending to buy with a stop loss 1700, and here we are expecting a target towards 1820 level. Second trade, that is buy on Apollo Hospital. This stock has seen the huge open interest of 30% in this series, and expecting more long rolls to carry into the next series. Recently, the stock has decisively given the close above 5000. However, it has doubled in this year, but still the trend and momentum is so strong that the stock has potential to further rally by 5 to 8%. Recommending to buy on Apollo Hospital with a stop loss of 4980, and here we are having the target of 5380. Last trading idea, that is buy on the Larsen and Toubro. This stock has given a breakout from its warning formation. Major trend is positive. Long built up led by short covering is giving the sign for the further momentum. So recommending to buy for an upside move towards 1850, and traders can buy with a stop loss of 1730 levels.
Okay, thanks a lot for those trades, Chandan. Let's now look at the pre-opening rates. Of course, all over the place. But you know, you'll keep an eye on the IT stocks to begin with because of the Accenture numbers. ITC is having a decent follow through. In fact, ITC has really been one of the stocks of this month, 16% higher. No, I'm not kidding. It is 16% higher this month. TCS, Infosys doing well, Bharti Airtel doing well, Bajaj Finance, Bajaj Finserv doing well. Actually, Gurmeet, Bajaj Finserv, you know what's happening here? It's actually beaten Nifty to that 18,000 raise.
So, Anu, the more people say the Bajaj twins are expensive, more they continue to surprise. I think since they came up with that fintech platform, then there's been news of the MF license. There was some news of, obviously news of they acquiring one of the mid-size AMCs, and obviously broad pickup. I think, and I've always maintained that this is a fintech consumption play in the finance and should not be viewed in traditional lens. But can't add more at these prices. Haven't been able to add, to be honest, the last couple of months in these two counters. But continue to remain constructive on this in terms of a broader fintech play, Anuj, as far as the Indian fintech ecosystem is concerned.
Okay, just looking at some more pre-opening rates, by the way, because the Dish TV is up 4%, Zentech is the other one which is up about 5%. Tata Steel is doing well. That also is doing well in trade. There's some profit taking happening in Hindalco. That was one of the top gainers yesterday. It's down about 0.7%. But Tata Steel is up 1.6%. Ajay Srivastava is joining us, CEO of Dimensions Corporate Finance Services. Ajay, good morning. So,
good morning, Anuj.
This is a bit of a parabola, right? How do you approach it? Because the most money is made when you are in parabola, but you're always at the risk of that falling off the cliff. But your thoughts?
Well, I think the risk is there. That's why you get your returns, Anuj. But I think so far we can lay strength in spite of absolutely ridiculous valuation with the retail public of India, which has got loads of money to invest in the market. And that's what is holding up. It's not institutional money, it's not FI money, it's a pure retail public which is kind of investing in it. So given the fact that we have an economy which is 5 to 7%, not many growth opportunities for businesses, one can see very clearly the fact that you will see inflows, more and more inflows in the equity markets. And it's very symptomatic, Anand, because he's right. It's a parabola. It may come down. But that's the beauty of this market is every come down has given a next ride up. So it's like a Nike roller coaster. And therefore, the only paradigm I am following is now, and my team is following is, we only buy on red days. Deep red days are the only one. Green days, we just go and enjoy our lunch. So I think that's the only, and that's the way we got to run this market.
But that's the problem, right, Ajay? We haven't got any deep red days in very long. I mean, if you look at the chart of the Nifty, which is already up on the screen, it's been, what, 1.5 years that we've seen no more than 10% correction. I mean, the market has been waiting for that, but it hasn't come. So what do you do now?
Sonia, if you look at last week also, there were decent correction in some of the stocks. Now, if you look at the steel stock, for instance, they've corrected quite substantially at this point of time, from where they were less than 3 weeks back. So you got a sectoral correction. You saw the banks, they corrected quite substantially. Then you saw pharma corrected. Then you saw FMCG corrected. So the index is holding firm because of the fact that the Reliance is holding firm and Bharti Airtel has done well, etc. But the fact remains, subsystems of the index, they have given tremendous opportunities to buy the stocks. And all have got decent correction. It's not bad correction. And stock-wise also, if you look at United Spirits, you look at even any of the stocks that you want to buy, all have seen correction on a good quality correction. And as a good quality means, the next ride has been 20-25% up rather than being just 5% up. So sectorally, yes, market has given opportunities. Index, you are absolutely correct. Index has not left any room for people to maneuver. And of course, I do not know who is the short left in the market because I think they were all buried maybe closer to last month.
Yeah, I guess so. Which is why, Ajay, I'd rather ask you about what you would have for lunch, on the days you're not buying anything, but that's for later. So, tell us, given that this is the way the market is and we don't know when those deep correction days come, which are the pockets where you still think, adding more money makes sense? Could it be IT? If it's just going up and up. Could it be more on the FMCG side? What are you looking at these days?
See, I think it's run up quite substantially, and we discussed, Anuj and I had a long chat last time, but the real estate to me is still the sector where I think there'll be enough money to be made because this is just the beginning. And if the government policy is that they will give more and more high rises and the FAR goes up, it's like multiplying and quadruplying your money as you've invested in it. So all the big developers, which are listed stocks, have got huge land banks. And if they got an FAR increase by even 2 to 3 times, you're talking of a humongous amount of pure profit rolling into the company. And there's no competition. It's not like the 100 developers not competing. So, if people are hungry for risk, real estate would offer them the best opportunity even today because going next 3 to 4 years is going to be the gangbusters of the market for them at least. And if the government policy continues, it's going to be phenomenal, right? What I don't like in this market, I'll be honest, is banking. You've seen the price war on the housing loan in the market, and people still expect banks to make supernormal profit. I can't argue with the market, but the fact that we have an NBFC which quotes at a PE of 100 and a book value of 14 defies my logic. So I'm actually, my lowest priority is to financial sector at this point of time. The real sector offers great opportunity, but market is market. It can define logic to say why there's a price war in housing loan market, but the bank stocks are going up.
Yeah, bank stocks are going up. By the way, the Sensex, in all probability today, will start at 60,000 plus. The Nifty in pre-open briefly touched 18,000, but that was, of course, a freak rate. That perhaps still has some distance to travel. But 60,000 on Sensex appears a formality this morning. Infosys should lead it. At least that's what the pre-open is indicating. 1% higher. Ajay, Infosys is up 1% today, of course, but it's been a big, sort of big money spinner. In fact, all these IT names, and in the mid-cap IT, we have stocks trading at 35 times now. What are your thoughts here?
Well, it's the safest haven for people. Anuj, to be honest, the safest haven for people because one, the market is expanding. That's one, so you don't have to worry about too much about market. They're clean companies by and large, so governance is not an issue. Dividend yields are high. So for an average investor, let's go back to the scenario 2 years back, Anuj, where the Indian investor was terribly underinvested in IT stocks. It was only institutional holding. It's been the last 12, 18 months that the real investor participation has come in. And now they're seeing benefits that what our grandfathers used to think about a Nestle or a Hindustan Liver is really speaking what we are thinking about our children in respect of IT stocks. I think a great going valuation, as I said, you cannot argue with the market given what's liquidity coming out of the US. But a very strong indicator is caution. The only caution I tell people is that you need to have enough room to buy when it goes down. Doesn't matter, you don't miss out the whole rally. You bought 50%, that's all right. But to buy whole soul in this market, I think it's risky. It's highly valued. IT stocks can at best give you, growth is almost single digits, even not even double digits in terms of rupee terms. So therefore, it's good stocks. Value, I do not know what's right, but if you have a 10-year horizon, then it doesn't really make a difference, Anuj. And I think that's the way people are looking at saying, I'm not here for 1 year or 2 years, let it ride for 5 years. And that's what dictating the market, I guess, is that people's horizon has changed dramatically compared to the earlier concept of what's going to happen in the end of the year.
Oh, absolutely. I mean, let's just spend a bit of time and savor that moment, right? The Sensex is all set to open above the 60,000 mark, the grand old index hitting that huge milestone. And let's face it, right? I mean, Ajay, the equity cult has really grown by leaps and bounds. We were just discussing earlier, 10 million accounts, demat accounts were opened just between July and January of 2021. It's double of what we saw last year. So clearly, retail is coming into the market in a big way. And, so much time has passed between when people would invest only in physical assets. Now they're moving into financial assets in a big way. Do you think, despite everything that people say about, valuations being sky high and, the market being expensive, there is still a longer, sort of a protracted upcycle that we're staring at in the market? Could this just be a nascent stage?
Oh, Sonia, absolutely correct. But before I answer that question, I would request Anuj to do a Freshworks gig on the screen right now. If Freshworks can do it in NASDAQ, so can Anuj in the studio. Right, Anuj?
10 years back, I would have done it, Ajay. Not now.
Oh, come on.
We get a...
Sonia, you can ask Sonia and Surabhi.
When the Sensex hit 30,000, I will never forget.
We can call Nigel and Mangalam to do it.
You remember those t-shirts, by the way? I'll never forget that. After that, we decided, we will be a bit somber in our celebrations every single time. Yeah.
But you know what? I think, and Ajay, come in on this as we're going to get to the eventual opening. Wouldn't you agree that the retail investor has really matured? I mean, we end up sometimes talking about this retail investor as the last to the party and, not being nuanced enough. I think what the last 1.5 years of the pandemic has taught us, that things are changing. I mean, even a 30-year-old has a very clear mind about what he or she is buying or selling, and they have information at their fingertips to make that decision.
Oh, absolutely. Surabhi, the asymmetry of information, what was classic before was that only the analysts could meet the management and then they had to do it. That's over. Symmetry of information has made the fact that people getting information real time to a wide variety of people. That's the one part. The second is, which is the biggest problem. You may think it's an upside for the market. I got people who do businesses saying, I don't want to do business anymore. They don't want to grow the company. They're just coming to my office, landing and saying, invest my money. I don't want to do anything. I want to go to wherever I have to go to and do accelerate my bucket list. So part of the retail public is what you talk about. But I'm telling you the bigger part of what's buying the market are SSI, MSME businessmen who have given up on their businesses. accelerating the bucket list and saying, let's invest in the market and get off, because they are giving the bulk of the money. And retail is good. I'm sure the youngsters are buying it on, but the big bulk that we are seeing is coming from a segment which was earlier expanding their capacities. So that's a paradigm is, as I said very clearly, you're right. Financial assets are being in the order of the day, but not that real estate is not being bought. People are buying real estate, they're buying it. But the point is, to buy real estate, you need 20 lakh, 40 lakh, 5 crore, 20 crore, depending on what you want to buy. To buy a stock, you need 100 rupees. And to buy a Bitcoin, you need even 10 rupees for that matter. So asymmetry information, I think power is there. But I think the only worrying part is businessmen saying, I don't want to do business and invest in the market.
You know what? And Surabhi, all it requires